Good morning, everyone. It's Yaritza Salazar, again from YNS Accounting. I'm coming here with a very short video today to try to explain the Jobkeeper 2. Have been receiving a few calls from my clients with questions, so I thought I'd do this video and try to clarify some of them. Perfect. So for anyone out there who is watching this video and don't know who we are, we are an accounting company, YNS Accounting, with offices in Sydney, Melbourne, Brisbane, and Adelaide. And this is me, I'm the director, and hopefully the information that we'll be bringing you guys today is helpful. Okay, a very quick disclaimer. This is general information only. This is no financial advice or accounting advice. So if you need any advice specific to your circumstances, it's very important you get advice from an accountant, a tax lawyer, and review your circumstances. Okay, so the Jobkeeper 2 was passed by the Parliament on the 1st of September. And they had decided to extend them to March 2021. Our current one is going to finish on the 28th of September, so a couple of weeks from now. What do we need to consider in this Jobkeeper 2? There are three important points I'm going to mention today. First of all, eligibility of the business. Second, the employee. And third, the payments amounts that we had to pay the employees. This is one of the most common questions I receive from my clients, and it's like, if I had enrolled in Jobkeeper 1, can automatically apply to Jobkeeper 2? The answer is no, you can't. You have to go and do your homework again to make sure if you are eligible. How do we know if we are eligible or not? So we have what we call the basic test, where we're going to check if our income has been reduced or our turnover has been reduced by 30%. So we had 2 rounds of this second Jobkeeper. The first round goes from the 28th of September 2020 to the 3rd of January 2021. With this one, the ATO, what they say is, I'm going to take your September batch 2020 and then your September batch 2019. And if this went down by 30%, then you are in. Very important here, guys. And obviously, there is an anti-avoidance provision because they already have few clients that with the intention of classifying to this second Jobkeeper are going and doing amendments to the September batch. So the amendments are not being done, are not done automatically as usually happen, but the ATO is asking more information. What is the reason you're doing those amendments? If it's just because you want to classify for the Jobkeeper, or if it's a genuine mistake that you did when you report that quarter. And with this second eligibility test, we cannot take months. Like before with the first one, remember we could go and take a month from March to September and just like cherry pick our month and find out which one was better for us to be able to classify to that Jobkeeper. With this one, it's very simple, September quarter for the first round and December quarter for the third round. So for the third round, which is going to go from January 2021 to March 28, 2021, we're going to take the December batch. Very simple, batch lodge and 30% down, then all good, you classify. And that's what we call our basic test, right? What happened? We had what we call the alternative test, and these tests are applied for specific businesses or circumstances that are not fair to use the basic test. Examples. the business commenced after, say, the 1st of July 2019, so, or in December or November. So when I go back, I don't have data to compare. So the ATO had to create this alternative test. As well, if you bought a new business and the business were not around last year, or you were not the owner of the business, so there is a test specifically for that. You change your business. You know, you maybe had a restaurant and then you decide to put a beauty salon. So totally different business. Then we had to go through the alternative test. One here that usually I have been using with few of my clients is what we call the substantial increase in turnover. So let's say that your business last year was just starting, little sales, but explode December, January, even February was really good. So it's not fair to compare to last year. So the ATO say, okay, what I will allow you to do is go and take 3 months before COVID started, and then we're going to take that as your average month turnover. So with some of my clients, I have been going back to January, February, March. With another ones, sometimes December, January, February give us a better result. So here you need to do your numbers to ensure that you're able to classify through this alternative test. We also have the people who have got affected through the bushfire, so that they have been also taking that into consideration. And finally, the other ones is what we call the irregular turnovers. So with this one, we're talking a lot of the people who are in the business, like construction industry or projects. You know that they had a big project, they get a big lump sum payment, and then there will be 2 or 3 months without receiving any payment. So then with those clients, we're going to focus in this test. But let's assume I did my homework, I went through the test, or I did my basic test and I go down 30%, tick, my business can enroll for the Jobkeeper. Now, my second point, which employees are eligible, right? So in this second Jobkeeper, the important day here is the 1st of July 2020. And here, remember, with all this information is going to come up from the single touch point. So when you do the payments of salaries or payroll, that goes through the single touch point, and that's the information they're going to be using to see that person was there in your payroll. We had to do the nomination form again for the employees. And very important, so who is entitled? Which of my employees are entitled? Were employed with me on the 1st of July. They could be what we call a permanent, part-time, or casual employment. Important with the casual is still the 12 months prior with us. They had to be with us 12 months. And very, very important here, guys, resident status, right? The person or the employee has to be Australian citizen or permanent resident, or has what we call a subclass 444 visa. Why is this very important? I have few clients that have called me and I say, Charissa, I want to apply for the Jobkeeper, and maybe they have what we call temporary visa or student visa or working holiday visa. And I say to them, you can apply for this because the law is very clear. To be able to apply for Jobkeeper, you had to pass the resident requirements, which means you're an Australian citizen, hold a permanent visa, or a protect special category visa. So what happened or has happened is that either some employees has lied to the employer, and when they do the nomination form, they just tick, 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 and then the employer has claimed the Jobkeeper for them. Here, the big problem is for the employer, because he has to do his due diligence to make sure that that employee is entitled. So he must have, you just get a copy of the visa to ensure that the person is a permanent resident. Because at the end of the day, the ATO is going to ask you as the business to get that money back. You cannot tell them, no, I forgot to check properly the form, or that was a mistake on my accountant. The money has to be returned, right? And obviously, here is where we don't know if it was the employee or the employer being aware that they couldn't claim it, but they still did claim it, right? But super clear, must triple check there are Australian citizens or permanent residents. Okay, so I did my due diligence and the employee is all good, tick, tick. Now, how much are going to pay them? So for the second round, the payment amount has been reduced, and for the third round as well. Second round, 28th of September 2020 to the 3rd of January 2021. If my employee works with me more than 20 hours, I had to pay them $1,200. It works less than 20 hours, I had to pay them $750. So what happened here, guys? So what happened is with the first Jobkeeper, you could be working full time, 38 hours, and you still were getting the 1,500, right? And there was this guy who used to probably work 5 or 10 hours, and he was still getting the 1,500. So for this person here, that was like Christmas in July, like, you know, every 2 weeks getting a big salary. They to say, oh, maybe we have been too generous, so let's put this one down a little bit. And if you work less than 20 hours, you're going to receive less. Same thing for the third round. They're going to reduce more than 20 hours to $1,000, less than 20 hours to $650. You maybe are asking yourselves how the ATO decide how the 20 hours come from, right? So the ATO has tell us, and they say, okay, to work out how many hours your employee has with you, you have two options. You can go to the month previously to March, the 2 fortnightlies previously to March, say February, or the ones before the 1st of July, say June, and compare how many hours he worked in those 2 months, and whichever gave you the highest, that is the months that you're going to take. So in February, he works 20 hours, tick, I choose the month, and I'm going to claim the Jobkeeper on the 20 hours for that employee. So that's how the ATO is doing that this time around. So that's my third point. So how much I had to pay them is eligible, my business is eligible. And the last, very, very important here for the business owners is what happened with the first Jobkeeper, because it was such a big shock, and the ATO was in, really rushed to help businesses. They say, okay, you could reduce the hours of your employees in the first Jobkeeper to something that they call fair and reasonable. So maybe you were working full time, there is no business, the business is not trading, so I'm going to reduce the hours to 20. You could not change what we call the hourly rate of that person, but you were able to reduce the hours, right? With this second Jobkeeper, it's a little bit different. They say you can only reduce the hours of the employee to a 60% pre-COVID, right? So let's assume someone was in full-time 38 hours a week. The minimum you had to pay them after the second Jobkeeper kick in is 23 hours. So you cannot reduce more than 60% the hours of these employees. Here also we had a little exemption, because there will be some businesses that maybe cannot apply for this Jobkeeper because they couldn't reduce the 30%. But Fair Work has said, okay, you are allowed, if you reduce your income between 10% and 29%, you are allowed to get to pay your employees only 60%, but you must get a certificate from your accountant or tax agent notifying you that that's the decrease of your turnover, right? So this is very important for the business owner, because maybe after the 28th, we had to increase the hours of some employees to the 60% pre-COVID. Okay, so I will try to make it as clear as possible, plain English, and as I'm a very visual person, so I like to do my graphics. And I hope this clarifies for you the questions I have been receiving from my clients. And in case you are not our client, but you still need or want some help from us, this is our website. Feel free to come here and book your appointment, or in case you need to call us, this is our number. More than happy to help. And yes, that's all what I have for you guys today. Hope you had a beautiful day. Hope you can go out and enjoy this weather that finally start getting warmer. Good luck to all the businesses and all the employees, and hopefully this COVID goes out quickly. For all the clients in Melbourne, we had 2 more weeks and see how things start coming up. So have a beautiful day, and I will be coming out with more videos if there is more relevant information that I have to share with you guys. Bye-bye.